Hey everybody, welcome back for another daily recap. We'll be going over Tuesday, August 13th trading session today. Saw a couple of big ranges today in both crude oil and the mini S&P. As you can see here on the daily chart for crude oil, we're back into this range again, back into the range of indecision. We broke back above this ascending wedge, and now we're right back around where all the moving averages are. As you can see, we broke above this blue zone, the support and resistance flip zone, so we are above it. So as of right now, we are going to be looking for longs, but keep in mind, you'll see when we drop down to the 5-minute, we had a lot of big range candles, candles that the market likes to fill in. So we'll keep that in mind. We may expect a pullback tomorrow before we head higher. But as you can see right now, we're above all the moving averages. We're above the 200, the 50, the 21, and the 10. And the 10 and 21 are starting to curl up. We'll see. Maybe we can break above the upper trend line of this wedge here and above this support and resistance flip zone here at 57.57. So we'll see. The markets are just very volatile right now. They react to pretty much almost any news event that's going on. So we always have to be careful. Did not take any trades today. There were a couple of good, there were a couple of good trades that you could have taken, but you would have had to been very quick. And honestly, they would have been pretty lucky. We'll go over those when I drop down and run a little bit later. Let's look over the mini S&P chart now. All right, so if you remember yesterday, I said I was slightly bearish on this pair. That's completely gone. Our bias is now shifted to the long side. As you can see, we completely overtook the last 2 trading days with this massive bullish candle here. We're now back above the 10-day, and hopefully we'll see a little pullback. We might be seeing a little pullback to this zone here, or the 10-day might actually hold it, and we can start heading higher. Okay, let's drop down to the crude oil intraday chart first, and I'll walk you through what I was seeing here. If you remember what I said last night, I was looking to see if price can accept and hold above Monday's value area high, as well as last week's POC. Okay, so this is this yellow line right here. I was saying that if we wanted to head higher, we needed to close and accept above these 2 lines right here, last week's POC and Monday's value area high. So what did we see going into the open? We saw that price tested both above and below Monday's value area, as you can see here. We essentially rejected off both overnight. So heading into the open, what did we see? We saw the first 5-minute candle shoot down, tested this value area low, immediately closed back up, closed bullish. We went sideways for a bit. We even pulled back and we tested this line right here. Okay, so this actually could have been an entry at this moment right here. Because remember, we broke up above the value area low. We came back down, tested it on the pullback, and you know that I've been liking those plays, the pullback to the zones. So you could have entered right here. I most likely would have kept my stop below the opening's low, so right about 15 ticks. And then, of course, get our 2 to 1. So you could have gotten 31 ticks, or 30 ticks. Now, relative to this range, as you can see, it doesn't look like a lot, but let's try to get rid of that range. Let's pretend that range didn't happen. And as you can see, let's see if I can make this. There we go. It would have been a good trade. We broke, but remember, this is the value area low for Monday. Broke above it, showed strong rejection off it going into the open. Pulled back, retested it. This is a great entry signal. To be honest, I wasn't watching this pair. I was kind of focused on the mini S&P just because I saw a pretty massive move, so I wanted to see how that was going. Missed this trade, but that's okay. As you can see, it would have been a huge one. We went a lot higher. Let's get rid of this. So what I want to do is talk it through and pretend that this massive candle didn't exist. How would we have walked through this play? Now, I already said we could have entered on this pullback right here. That would have been a good entry signal. Enter here and go up. But let's pretend this big candle didn't happen. What can we expect from that point on? Well, we can expect it to hit this value area high, okay? So like you saw when I put that hypothetical entry, you would have hit your 2 to 1 just targeting the value area high of Monday. Okay, from there, what are we looking for? Well, we go back. We have this POC as well. which we would have hit. And then after that, what would we have targeted? We have this value area high of last week at 55.56, if you can see that right here, 55.50 level. Okay, so that would have been the short-term target. Closed above value area low. First target is the value area high of Monday. Second, the POC. And third, the value area high of last week. Of course, as you can see, we closed well above all of them, and we eventually rose up. So if you remember what I was saying yesterday in the mini S&P, if you remember, we saw that big down move, and I told you guys the only levels that you can really play off of, you have to reference to the left of the chart. Where has price not traded to, or where has it not tested? So look at naked POCs. Remember, naked POCs are points where price hasn't traded to, or naked value area highs and lows. Go back and rewatch yesterday's trading session if you're a little confused on that, but I'll walk it over again here. So we're trading up in this level. As you can see, when you look left, nothing last week is relative to where price is trading here. Correct? As you can see, we're above all of it. Once we close above last week's value area high, we have to look further left to see where we can reference some value areas to trade off. Okay, so keep going back, and you'll see that I have it marked out here. This is our 2 weeks ago. This is August 1st's Thursday's trading session. It's the last value area and volume profile where we haven't traded to yet. Okay, see what I'm saying? The first one you see when you go left that we haven't traded towards. And what do we see here? Well, we can reference a few things. The value area low has already been tested. As you can see, we've traded through it. We've traded RTH sessions through it. So that's out of the picture. Heading up closer, we'll see this POC, which hasn't been traded yet. Again, a naked POC. And also this value area high, which I like to call a naked value area high. Price is not traded here yet, okay? So those are two levels that we can target and expect some reaction off. Now, with such a massive move, as it was getting later on in the session, we did hit this level right here, which is the naked POC that we saw. If you can, I can't even get it all in one chart, but as you can see here, the naked POC, we hit it. We started heading higher. We almost touched, but not quite, the value area high of that Thursday trading session. So that could be a next target if we're going for the upside. Because again, it's naked, it hasn't been touched yet, price hasn't traded to it yet. But also, if you remember what I was saying earlier, we may like to see this get filled. I don't know if we're going to fill it tomorrow, it might be later on. I'm not sure yet. As you can see now, it's about 10:45 p.m. here. We're starting to head lower a bit. Again, it's just going to be another play where we're going to have to see closer to the open. But we're definitely favoring longs here. I do not want to see it close below this level right here, 55.75, which is the value area low for 2 weeks ago, okay? Or even lower than that, last week's value area high. Price should not close below it. There's no reason for it to go below that. We've already traded below it. We've traded up past it. There's no reason to pull back that far, okay? Let's draw on the value area for today. I'm assuming it's not going to give us many levels to trade off, but let's just draw it out. Oh, actually, I didn't really expect this. The value area is actually up here. That's good to see. Notice here we have a low volume node here, so we can expect some reaction, short-term reaction off of it. And the value area low. For ideal bullish scenarios, I don't want to see price close and accept below this low. Hopefully we could just bounce off of it and start trending higher again. But who knows with this market? We've seen a lot of just consolidation, choppiness. So it wouldn't surprise me if we close below it. But again, ideally for bullish scenarios, let's stay above this value area low. If not, we have this level right here and the top of the zone, which is essentially last week's volume area high, or value area high, I should say. Okay, so that's what to look for tomorrow in crude oil. Let's go into the mini S&P now. As you can see, kind of a similar move to what we saw in crude oil. Again, there wasn't really, in hindsight, there were definitely positions that you could have taken, but when the markets move this quickly, it's kind of hard to get into trade. You don't want to enter too high. There's no pullbacks at all, so you can't enter on a pullback. It's just a parabolic shoot up, okay? But let's talk us through what we saw here. So we opened at this level here, 28.79. Where is it relative to yesterday's RTH session? We're below POC, but we're above value area low, of course, okay? So overnight, we saw that price did try to trade below it, but ultimately we headed higher into the trading session. So what could we expect next? Upside target, this value area high here. We hit that and then started trading higher. So points of reference here. Last week's value area high, which is a short-term target, we smashed through that, of course. We traded higher, and this brighter red line here is the gap from last Sunday, if you can recall. Let me pull up the SPX chart. So again, this upper line right here, remember the gap fill, or the top of this gap? That is this deep red line here. And as you can see, prices do tend to show a lot of rejection or acceptance at these gaps, okay? So I like to draw them out, and you'll see that prices always reacting to those levels, okay? So intraday, of course, I missed all of this move. It was just too tough to get into. So intraday, I was watching these levels, seeing if we could close and accept above it. As you can see here, we shot up, had some divergence in the RSI here. We started trading lower, and where did we bounce off of? Last Friday's POC, which is a naked POC, remember. And if you're wondering why it's a naked POC, I'm not worried about this overnight price action, okay? Relative to regular trading hours, as you can see here, where we opened, we never tested above that, okay? So that was the upside target, as well as we can expect that to have some support and resistance, which is what we saw here. Shot up, bounced off the gap, came back down, went sideways a little bit at the POC, at last Friday's POC, and then we just chopped around between last Friday's POC and the gap, sorry. So we traded sideways, and as you can see now, even at 10:50 p.m., we're still in this range here. So I'd be curious to see what we do. For bullish scenarios, we should not break anywhere down here. I want to see us bounce around a bit, maybe shoot down to the top of this, or even see if this POC can hold, and we can start heading higher. Let's draw on today's volume profile, see if we can base any trades off of that. All right, let's see if this, I drew my level wrong. Let's bring this over. Sorry, that was crude oil time. Okay, so very small value area as well. I'm kind of surprised to see that as well. But as you can see here, a lot of inefficiency. Prices may like to close that in first before we head up higher, but I don't really want to see us close below here. It's just, these are very volatile markets. It could close, but we'll see heading closer to the open. Again, similar to crude oil, in an ideal bullish scenario, let's hold this POC, even the value area low of today. Let's hold that and let's head higher. Break above this value area high, show that we're gonna show that price accepts there, maybe a little pullback, and let's trade for the long side. Okay. It's interesting to see, even with large range days like this, it will still show reaction to our levels. As you can see here, even this gap on, what was this, last Thursday, there's a little gap here. As you can see, it never got filled in. We tapped it here, closed below it, and then we traded sideways in that range that we pointed out. So yeah, that's what we can expect for the mini S&P. Again, we are looking for longs now. Hopefully we don't, see some strong sellers come in and push below here. If we do, it's just going to be tough to get a directional bias. But we have our levels pointed out. Again, line in the sand for me is this Friday value area low. Well, if we break below that, we're going to see further downside. We'll possibly even test this value area high here for Monday's trading session in the POC. So let's stay above this value area low on Friday, okay? I'm not saying we have to go down and tap it, but let's just make sure we don't close down below it. All right, guys, that's going to do it for today's daily recap. Good luck Remember, guys, it's okay to sit on your hands. These are very volatile markets. There's no need to hop in a trade if you don't see one. If you see big moves like this, it's okay to miss them. I missed both of them today in crude oil and the mini S&P, but that's okay. There's going to be a lot more opportunities coming. Okay, let's just make sure that the trades come to us. You know, they line up perfectly for us, and we'll execute. No need to force it. All right. Okay, guys. I'll see you back again tomorrow.